Hello and welcome to our conversation on financial reporting. In this session, we will try to understand the term revenue, its measurement and reporting. We know that the revenue is an important component of any financial statement. The bottom line, whether it is gross profit or the net profit or variations of profit, EBITDA or EBIT, to a large extent depends on the composition of income, measurement of income. And the measurement of revenue is governed by Ind AS 115. But Ind AS 115 gives a broad structure but the actual measurement depends on the nature of the business model. So in this presentation, I would like to pick up few companies and just discuss about the various types of revenues of different companies. And in the next presentation, we'll get into specifics of measurement as per Ind AS 115. For example, in PhonePe. PhonePe is a leading Indian digital payments and financial services app founded in 2015. It enables users to make secure transactions via UPI, credit and debit cards, and wallets. It also allows for instant money transfers, mobile recharges, utility bill payments, investment. This is the business of PhonePe. But what is the revenue of that? The revenue of PhonePe can be divided into different baskets. One is a payment services revenue. Merchant discounts like fees on non-UPI instruments, fees from wallets, cards, and QR-based merchant services, platform fees for handling large-scale payment infrastructure. So payment services is one of the important components of PhonePe. Financial services distribution. PhonePe earns commission by acting as a distributor. Insurance, distributor of insurance, life, health, motor, and various types of insurance. It also distributes mutual funds and investments and earns commissions on that. Gold purchases, lending products like personal loans, credits. So this is one of their fastest growing revenue classes, the financial service distribution. One is a payment services. The other one is a financial service distribution. It also earns through advertisement and marketing revenue. Merchants pay to promote their offers, visibility, customer acquisitions. And in-app sponsored listings, data-driven merchant insights. So these are coming under advertising and marketing revenue. So one is advertising market revenue, other is a financial distribution, services distribution, and a payment services. Similarly, PhonePe also earns revenue through transaction processing and platform fees. Fees from partners for using PhonePe's tech stack, enterprise and partner integrations, payment gateways, services for large merchants. And also there are income from other sources which are non-operating in nature, interest and other income. They are not core business but reported separately in financial statement. Interest on cash balances, interest and dividends on incomes, one-time or miscellaneous incomes, if any. So if you observe, for PhonePe, 56% of the revenue comes from the payment services. 25 to 30% come from the merchant services and infrastructure. And 14 to 18% are in the form of from the financial services. So a large chunk of the revenue for PhonePe is a consumer payment services. So this is one example where the composition of the revenue depends on the nature of the business. Now let us see a completely different type of business, Tata Power Distribution Company. Their primary source of revenue is the sale of power. They buy power and sell power. Here we are focusing only on distribution. So the retail electricity sales revenue is the primary source. Money earned by selling electricity to the consumers at a price fixed by the regulator is a revenue. So unlike the PhonePe's revenue, here the revenue is regulated because it's a part of a regulated industry. PhonePe fixes its own price, but a distribution company's price is determined through a regulatory process by the respective regulatory commissions. Revenue from the sale of power to different consumer categories. The product is same. Huh? The product measurement unit is kWh. And as I said, it's billed in units. So revenue is equal to billing in units multiplied by the applicable tariff. And these tariffs are decided by the regulator. Other regulated charges also. For example, companies often have a fixed charge, a periodic charge monthly or a quarterly, which is independent of the units consumed or unit purchased or units billed. Whereas here we can see that the major source of income for Tata Power depends on the units to be sold. Customer connection fee, when a customer would like to have a new house and so new connection, so they have to pay customer connection fee. And also sometime minimum charges, which is the base charge, whether you consume or not, you're bound to pay. In some states, the distribution companies also receive subsidies and government grants. And it all depends whether that will be revenue or not, depends on what type of subsidy. Is it a revenue subsidy or a capital subsidy? If it is a revenue subsidy, then it may be treated as a revenue income. But if it is a capital subsidy, it will be adjusted, not routed through the income statement. So you can see the difference between the revenue of PhonePe versus the revenue of Tata Power. And similarly, in both the PhonePe as well as Tata Power, for that matter, any distribution company, they may be having other non-operating incomes. So any surplus cash invested. So that is also possible. Another company which is in the news of late is a Fractal Analytics. This is the first, they claim to be first AI company going to the market. What is their revenue? The core revenue driver is the analytical services and AI services. So Fractal Analytics earns majority of its income by providing data analytics, AI consulting, and advanced analytical solutions to the enterprise clients. Since they're going to the market, so according to the red herring prospectus, the analytical services contributed at least around 2,700 crore. A significant part of the revenue comes from this analytical services. They also have a subscription income, software-related revenue. So as we mentioned, sometimes the revenue may be a bundled product. A company may be selling a bundled product. So the smaller but a fast-growing part of the revenue comes from the subscription model. The Subscriptions give sharply in the details here, 167% in FY25. Similarly, these clients are coming across the sectors because they provide this analytics. So you have healthcare, banking, financial services. So they come from all types of businesses. In the same way, they also have a geographical diversification, geographical diversity. A big chunk comes from the US. It's important because the revenue is therefore subject to the foreign currency fluctuations. And there is an accounting standard, Ind AS 21, which affects the currency exposure, which accounts the currency exposure. So, to summarize the revenue measurement and reporting, though there is a standard Ind AS 115, revenue is not recorded in the same way for every company. The business model determines when revenue is recognized, how much to be recognized, where and what period it has to be recognized, over what period. Sometimes the revenues are spread over a period of time. Sometimes the revenues are recorded immediately. Sometimes the full amount is recorded. Sometimes it is distributed among the products if there is a bundle product. Sometimes there may be non-cash. Will revenue always be cash? No, there may be huge non-cash consideration. So the computation of revenue to a large extent depends on the nature of the business. Thank you very much.